Hi, it's Peter Temple for Monday, March the 7th, and this is the market report. Well, we topped on Friday, which was good. This is the second wave. I'm going to just go back and recap the S&P 500, and then we'll move on to the Dow and the Nasdaq and show you what they've done as well, because this first wave down has really been a conundrum in terms of figuring out where it's been going. So I'm going to start here with the S&P, and then I'll just show you what we've been looking at. So we go back to November last year, the beginning of November, and it's interesting that all of the turnovers, the major turnovers over the last sort of 6 months from September, have all happened in the first few days of each month. So November, we had a December 3rd here. We had a January, well, this one, January 31st. But we've had all of the major turns right at the beginning. And of course, we're at March now, and we have another major turn. So that's an interesting aspect of the cycles. So we had a third wave. There's a big ABC corrective wave up, which became our second wave, a big second wave, which I don't have marked here. But we had the thing that has been the problem for us has been this truncation. We were expecting a fourth wave here and a fifth wave up, and what we got was a truncation. It didn't make the top, and so this made this very difficult to figure out what was going on. And looking back, we've named this first wave down, second wave, and I called this right at the top January 31st. I knew we were going to come down because we'd done an ABC corrective wave, but I had no idea how far. Because again, I was expecting to see a top, and we ended up doing a first wave. But here's the issue with this first wave down, in that all the three major U.S. indices have done it in a different manner. So we've got the S&P 500, which came down in a big third wave, and it's nicely marked here, 3, then did an ABC up, which is a corrective wave. And if you're new to Elliott wave, the letters denote a corrective wave or a counter trend wave, and the numbers are motive. So that's why you see the difference here. So you see it did a fourth wave here and came down to a new low. So that made this a fifth wave. And I'm going to show you the Dow in a couple of minutes. And the Dow and the New York Stock Exchange did not come down to new lows, so they ended up doing actually a corrective wave from this point. This ended up being the bottom of the wave. So boy, this has been really difficult to figure this thing out because it is not traditional and not what you'd expect. But lately we've had this ABC corrective wave up, and within these we had 5 waves up here, although a very small second, and then we had 5 waves up here, and this is an ending diagonal, and these are all over the market. We've seen these again and again and again. And the question has been, for the last few weeks, has been, is this going to stop here at the fourth wave, which is what I expected because of the Dow and the New York Stock Exchange, or is it going to go up into a second wave? And it went up into a second wave. And if you recall last week, I said, well, they all have to get here. All the major indices have to meet this 62% retrace line, which is what this is. And all of them now have, and they have all now turned. And a little later on, I'm going to go into a close-up and show you what actually happened here, and it happened to all of them at the same time. So we have topped and we're headed down, and this is going to be a third wave. And if you look at the post, I'm going to give you the path, but we're going down in the S&P. I'm projecting 1300 as being the bottom once we get through the third, fourth, and fifth waves, and you're going to see us go down to about 12,000 in the Dow. So it's going to be a major drop of about 5K in the Dow in the third wave, and so it's going to be a major disaster here, and we'll do a play-by-play and let you know how it goes. Let's move on very quickly to a 2-hour chart of the Dow. And you can see it had the same truncation here. Then we had a first wave down. This is a very corrective wave, and so we're calling this a motive first wave down just because of the truncation. Now it also could be that this was the truncation, and we really don't know what was supposed to go up to the top here and come down. But with the Dow, we came down on a third wave here, and we hit bottom, and we did an ABC. This wave in the S&P did not come down to a new low. So this ends up being an ABC corrective wave, and it still went up to a second wave, which means this mumbo jumbo in here is part of this first wave down. Again, this looks like 3 down, but it's very emotive, and I'm calling this a truncated first. But that's been the difficulty of this market so far. So we'll move on to the New York Stock Exchange, the mother of all exchanges because it's the largest in the world. And we had the same pattern here. We had this truncation at the top and then this first wave down, second. And this one, again, over here did not come down to a new low. So this ended up being an ABC, but the configuration looks very emotive. And so we're calling this a first wave down, second wave top. Again, everything got to 62% retraced on Friday. So we are there and we should turn down in a third wave. Here's a 2-hour chart of the NDX, which is the one with the top 100 stocks of the NASDAQ. So it has a very similar pattern to the NASDAQ. I've numbered this a little differently. This again, as the NASDAQ did, came up and actually did a double top here, being a fifth wave. So there was no truncation here, but it had some very strange waves after that. This is actually a wave in 3 waves down, but I've got this labeled as a 1, 2, and actually this being a large third wave here, and then a fourth wave is at the top. And what the NASDAQ has done, and the NDX, is that they've retraced not quite to 62%, which this line is here, which would then denote a second wave. They've actually come up to a previous fourth, and I put this of 2 degrees lower, which is a little strange, but that's where they have topped, and we'll just have to see what happens. It says they're going down in a fifth wave, and that certainly can happen. A fifth wave is a very long wave, which could go down just like the third wave in the other indexes and be just about as long. So the NASDAQ should go down in a fifth wave here to the same length as the waves so far. So this will take it way down, and you will find a target in the blog post. Let's go back to the S&P 500 and we'll zoom in to a 1-minute chart on Friday just to show you what happened towards the end of this ending diagonal up, and this denotes the fifth wave of the ending diagonal, and it's a great big ABC corrective wave from the very bottom. And what happened on Friday is we had this fourth wave triangle develop here, which fourth wave triangles in the fourth wave, and that's where they typically appear. They can appear some other places, but most typically they are. They forecast the end of the wave, and they say that there's going to be one more actionable wave, and it should usually be in 3 waves, and that's what we had. And in this last wave, we had 5 waves up. There they are, and that denotes the end and the change of a trend. And then we had this very motive wave down here, 1, 2, 3, 4, 5, and this wave here was in 5 waves as well, as I see it. And so we've had the first wave down, and this might be the small first wave of a very much larger wave. And then we had this almost second wave up. It didn't quite reach the 62% retrace, but I expect that to happen on Monday morning. So I'm not expecting to see this go up any higher. This actually, because we've had what kind of looks here like it could be 5 waves up, we might go to a new high here, or just to this test this high, but because of this fourth wave, which denotes the end of the trend, we should not go any higher than this and should head down. So I think we've got a couple of options just to go up here or go up to the top and then head down. But this denotes a trend wave, a motive wave, and so this really, I think the probability is that we just top here in a second wave and head down Monday morning. And so that's where I'm going to leave these indices at. So I want to take you to the euro US dollar, because I think it's important what that's doing, and that gives me another clue as to this market turning over. Now here's a 4-hour chart of the euro US dollar, and if you've been following my blog for some time, you know that I've been talking about the euro, actually the currencies moving contra to the US equities, and they continue to do that. I'm just going to get rid of this here. And so what we have seen from December of last year, and this was the beginning of December when the US equities turned down, the euro turned up, and we've had this first wave up here is actually an A wave because this is a full corrective wave and it's going up a lot higher. But within that, we're going to see some 5-wave moves. And so what I've labeled this is an A, B, C, which is going up very much higher. And within this, we should see 5 waves. And so I've started to label those 1, 2, and this is the first wave here of what is going to be a sequence of 5 waves up. And we're beginning the third wave here, and I had labeled this and was expecting this wave to come back to 62%, which is what this line is here, denoting a second wave, and that's exactly what it has done rather. And it has turned up in what is 5 waves. I'm going to zoom in and just show you that because I think that's important to what happens on Monday, because it has to retrace in a smaller second wave here. But the trend is up in the euro, and I think it's going to go up an awful lot further. This is going to be a great wave to trade, this third wave going up. So here we are zoomed into the euro US dollar. This is a 30-minute chart up here, and what we saw was the euro coming down in, and again another ending diagonal, and I watched this one unfold into the second wave here. This is the larger 62% retrace line, so you can see it went just below it, and then it started up in a very motive wave. And it was questionable as to what waves we were in until Friday, actually, when we had this big drop here. And if you measure these waves, you'll find out that if you create this as being a 1, a full length of a 1, you'll find that this third wave here is 1.6 times that wave exactly. So that would denote this is a third wave. And this wave here, which was questionable, is also 1.6 times this first wave. So I've labeled this the fourth wave and the fifth wave here. And so that means we've done one complete motive wave up. And so Monday, or actually on Sunday, we need to do a second wave. And I've said to you that the U.S. equities are moving contra to this. So actually the equities will probably go up slightly, and I'm talking about the futures because that's the only thing that moves on Sunday. Whether they go up and complete a double top, I'm not sure, but we're going to see, I think, the euro come down to a second wave and be ready for Monday to move up in a third wave, which then should send the equities down. So we're at a cusp here, and we've already started this third wave up. So that is saying that the U.S. equities, and I've also found that the euro US dollar has been somewhat ahead of the U.S. equities. So you can look at where the euro US dollar is going, and it seems that the equities follow about a day or sometimes even hours later. So this can be a nice little bellwether for you to figure out where things are going. But I would expect the euro US dollar to head up on Monday and for US equities to head down. And that's my market report, a long one I think, for March the 7th. A lot going on, but we are at this cusp, and so we're looking for some good trading coming up. So I wish you all good trading coming up.